And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning coming to you live from Channels HQ right here in Lagos. Happy New Month, and I hope this month will be more profitable than the last. Let's get the top stories now that set your agenda. Yeah, we see the central bank says it has no plans to restructure or redenominate the country's currency, that's the Naira, from January 2024. This clarification by the financial market regulator, which is issued in a statement on its website, counters some reports which suggested that the CBN planned to do so while considering some reforms. The Apex Bank explained that the alleged report was merely a modification from an old policy move by a previous CBN governor in 2007 and was made to appear recent. Meanwhile, the CBN says that any reform on the agenda will conform with the provisions of its 2007 Act and advise the public to disregard such publications. And the Nigerian National Petroleum Company Limited says it recorded 144 crude oil theft incidents in the last 7 days. In a statement made on its Twitter handle, the state oil company mentioned that it reported a series of crude oil theft incidents that occurred between October 21st and 27th in various locations across Delta, Bayelsa, Rivers, Imo, and Abia states. The NNPCL report also points out that 24 suspects involved in crude oil theft during the specified week were arrested. And let's get a check on the global oil market. Now we see oil prices edged up in early Asia trade today ahead of key meetings of global central banks this week, including the U.S. Federal Reserve, while the market closely watched the latest developments in the Israel-Hamas conflict. Brent January crude futures rose 0.8% at 66 cents to $85.68 a barrel after falling more than 1% on Tuesday. Brent December futures settled 4 cents lower at $87.41 a barrel. The contract expiry on Tuesday. U.S. WTI crude futures gained about 0.6% to 52 cents to $81.54 a barrel after losing about 1.6% in the previous session. Crude oil inventories in the U.S. rose by about 1.3 million barrels last week, while fuel stockpiles fell by about 360,000 barrels. According to market sources citing American Petroleum Institute figures, that was yesterday, distillate inventories fell by about 2.5 million barrels. And to the grains market. Now, Chicago wheat prices fell today to match Tuesday's 3-week low on strong supplies from Russia, lackluster demand, and less concern about small crops in southern hemisphere exporters. Soybeans also slipped while corn edged higher. Most active wheat futures on the Chicago Board of Trade, CBOT WV1, was down about 0.2% at $5.55 a bushel. The fourth straight daily fall. CBOT soybeans SV1 was down about 0.2% at $13.07 for half a bushel, while corn CV1 rose 0.1% to $4.79 a bushel. Soybeans have recovered from a 22-month low of $12.51 last month as low production in Argentina boosted demand for U.S. beans and soy meal. Corn is near September's 33-month low at $4.68 amid plentiful supply. And the Nigerian gaming and betting industry has been identified as key contributor to job creation and economic development, but the lack of effective regulation is seen as a hindrance towards unlocking the potentials of the industry. This was the thrust of discussions at the International Gaming Conference organized by the National Lottery Regulatory Commission in Lagos. The conference highlights the need to harness appropriate technology to leverage the industry to promote good governance. Take a listen.
It's the second biennial National Gaming Conference with key industry players from within and outside the country, government representatives, regulatory bodies, among other stakeholders in attendance.
Nigeria's gaming industry is worth an estimated $70 billion as at 20.
The focus here is to explore and embrace the potentials of the gaming industry, which is believed to be key to Nigeria's economic diversification drive.
The need to constantly adapt and evolve in this dynamic environment is crucial for the industry and our nation. We endeavor to enhance the strategies for success that resonates with the dynamic gaming landscape.
Going by population size, Nigeria is set to have the largest betting market in Africa, with revenue from online sports betting alone projected to reach over $250 million by the end of 2023. While this may sound good, speakers are concerned about revenue leakage, potential exploitation, and the need for effective regulation.
I'll suggest that our industry should leverage data analytics and artificial intelligence to harness, detect, and prevent fraudulent activities such as match fixing or cheating in online games. With the growth of online gaming and betting, there is a significant opportunity to increase tax revenues for our nation.
When you don't win the lottery, your money supports national development. So it is not all in all a loss. You win, you lose, and you win on the other side. I would implore the NLRC to examine and continue to institute this practice in your operations.
The conference is considered timely, considering President Bola Tinubu's agenda for economic development.
The federal government will do all within its statutory powers to ensure that the gaming industry remain on the steady path of sustainable growth and development.
The presentations will form the basis for further deliberations during the two-day conference that also features the exhibition of various gaming and betting companies. Participants expect a thriving and secure gaming and betting industry that not only entertains but also contributes significantly to Nigeria's economic growth and well-being.
All right, to our first conversation now. Nigeria Labour Congress, Trade Union Congress of Nigeria, and the Nigeria's Employers Consultative Association, NEC, have raised alarm over the continued free fall of the naira, asking the federal government to take urgent steps to stabilize the national currency. Well, let's hear more now from Mr. Adewale Smart Oyerinde, Director General of NEC, joining me via Zoom from Geneva. Great to have you on the show. Good morning.
Thank you for having us.
So, how are businesses and employers, navigating the distortions in the FX market, and how much can businesses and employers, take at this time with the distortions?
Well, thank you. It's quite obvious for everybody to see whether you are in business or you are not in business. The consequences of it will eat you and eat you very hard. For organized businesses, it's been quite difficult planning. You make projections in January, and the rate at which things are changing is quite alarming. That you find it difficult to keep up with that level of change. The disruption to operations is quite obvious. The cost of inputs and cost of imports has also significantly increased, and this creates a negative value chain, because as the cost of input and cost of import continue to increase, it affects the cost of goods and services. As the cost of goods and services continue to increase, you also run, as a business, you run the risk of increasing unsold stocks, because if the capacity and ability of the consumer to purchase is not meeting the rise in cost of goods and services, then the ability to buy will be constrained also. And as that is happening to you as a business, because you can't sell and you can't also arbitrarily increase prices, you are forced to contract. You start reducing your capacity utilization, and as you reduce capacity utilization, there's also risk for job losses, loss in profit, with the whole gamut of consequences for the economy as it were. So it's been quite challenging. It's been quite unfriendly as per the environment. And we're just hoping that the plan by the federal government to come up with new forex rules will materialize very quickly.
And most times, we know sometimes, challenges, bring about, innovations. And you did mention, the rising costs of inputs and imports at this time. Are there any conversations about, sourcing some of these inputs locally?
Now, during the last administration, and we know that the Ministry of Trade and Investment, the central bank also encouraged backward integration, which we feel strongly is one of the ways to go, one of the things we must deliberately encourage. Now, government policies sometimes create a different dynamics. We call it policy somersault. You as a business have invested massively on the issue of backward integration. Probably you've invested in wheat production, you've invested in dairy production, and one night or one morning you wake up and see government has opened up the borders for importers to bring in those goods. So it creates a level of uncertainty for you. But definitely backward integration, sourcing those materials, those inputs locally is the medium term and the long term strategy that can help us not only to remain sustainable as businesses, but also to address the issue of forex that government is having. If we can source those materials locally with support from government, then the pressure on forex, the pressure to get forex to import will also significantly reduce.
And how are employers, managing employees, at this time? Because currency devaluation, inflation, they impact, workers heavily because wage growth is not as fast as inflation and devaluation. So, how are employers managing to manage employee expectations, right now? Because I'm sure the dynamic must be quite, difficult.
For the organized private sector, we say is double jeopardy. As you are struggling with the issues of an inhospitable environment, you are struggling with regulatory and legislative harassment. At the same time, you have to deal with the cost of doing business. You have to deal with high interest rates. You have to deal with so many issues, and you also have the employees to. You have to manage the expectations of the employee. We've consistently engaged. Our members have consistently engaged their employees, so that the reality on ground will not be lost on all of us. But we must commend, and this is quite important for us to commend the resilience and doggedness of Nigerian businesses. In spite of these challenges, many businesses have taken the bold move to increase salaries, taking the bold move to support the employee in cash and kind. And some have come up with different models of working from home to also reduce the pressure of the employee on the road. This is before the government came up with the wage award. So the private sector has taken the lead, and we are still taking the lead. But I must say that it's not comfortable, it's not convenient, and we hope the situation will change for the better quickly.
Yeah, hopefully. But what's the experience with your members when it comes to employee retention at this time?
Well, our commitment to employee retention is very high. In 2019, 2020, we actually had an MOU with organized labor at the height of COVID, when production was low, when businesses were bleeding terribly. We had an MOU with labor then, organized labor, that employers will do whatever is necessary, that employer will not retrench staff during that period. And employers kept faith with that commitment. Now, that commitment still stays. Retrenchment is not the first option for employers. The option is to do all that is necessary, innovatively, in whatever context, to make sure that we don't escalate the issue of unemployment in this country. When it is difficult, our commitment to continue to create jobs still remains.
And talking about organized labor now, what's your outlook for industrial actions in 2024?
Well, the national minimum wage will the conversation or the negotiation will start hopefully for the end of this year. We've received a letter from the Ministry of Labor requesting for our nomination at the organized private sector. That will be done in the next 1 or 2 days. Hopefully, the negotiation will start in December, January, for us to have leveraging on Convention 131 of the ILO on minimum wage fixing. Hopefully, we'll get a new minimum wage in 2024. Now, on this industrial action, for government, and I must say this responsibly, for government, the government have the capacity to borrow. Government have the capacity to print money to fund its activities. The private sector doesn't have that luxury. For every 1 naira you borrow from the bank, you are constrained to pay the capital and also the principal and also the interest. Your loan payment, your repayments doesn't go on strike. Those liabilities to vendors, internal and external, they don't go on strike. Disruptions, your creditors will not look at the business that they didn't work and they will suspend the payment of your loan. It doesn't happen like that. So the dynamics in the private sector is different. And that's why we're making stakeholders to see, look, government can go ahead, shut down, Labour can shut down government businesses because government have the capacity to manage it. The private sector doesn't have the capacity to manage it, especially when the private sector has consistently lived up to its expectation, continue to pay salaries, continue to provide a hospitable environment for businesses, for its employees, and continue to strive to create decent jobs for citizens. So the dynamics differs. We are hoping that with the whole conversation that is going on, the industrial relations atmosphere in 2024 will be more climate, will be more temperate, and will be more peaceful. That is our expectation.
And talking about the government, having the ability to print, at this time we're still reeling from the 23 trillion, printed last time, and the government is still struggling with, payment of interest on that ways. So I don't know if they have the luxury to print, at this time. But talk to me about how, the depreciation of the naira has impacted the ability of Nigerian business to operate and compete, in the global market.
The global market is a different ball game, and sometimes we wonder if government is not playing lip service to the context of the African Continental Free Trade Agreement. The agreement creates a dynamics where free flow of goods and services within the context of these different protocols. Now, if we are committed to the AFCFTA as government has said, then the responsibility that government has is to make sure that local businesses are not only sustainable, but they are competitive. So that the goods that are coming from overseas, from African countries, doesn't become the undertakers for local businesses. Because if the goods coming from overseas, if they are cheaper than the goods produced in this country, then the consequences is that you strategically kill local industries and you kill their ability to compete. So the issue of forex is a big one, and we just hope government will address the issue of supply. I think fundamentally it's the issue of supply. And Economics 101, from our understanding, says that if demand is higher than supply, then the price will go up. If supply is higher than demand, then the prices will come down. If we don't address the issue of supply, forex supply, will continue to have this distortion. In your earlier report, it shows that there are 144 oil theft incidents in 7 days. Those are leakages that governments need to plug. We need to promote local production so that our propensity to import will reduce. We need to fix the refinery so that our propensity to import fuel will also reduce. So once we block all those leakages, we call them leakages, where the areas where pressure has been put on your forex, then progressively Naira will continue to appreciate.
All right, before I let you go now, give us a sense of the kind of conversations you're having with the government, right now, the kind of demands to help alleviate the challenges and the pressures businesses are having to go through at this time.
Well, the conversation remains ongoing. We've sent our position paper to government on the palliatives on the interventions now, not palliatives, on the interventions that are needed. And we appreciate the effort of the Presidential Committee, Taiwo Presidential Committee on Fiscal and Monetary Policy Reforms. And we've also seen the recommendation of that committee, the far-reaching recommendation of that committee, and we hope that the implementation of the recommendations of the committee will start in earnest. We've also discussed issues concerning trade, promotion of trade and non-oil exports. Last year we had early this year, sometime in June, we had our employer summit where the theme was promoting trade and non-oil export. And also lastly, we are also urging government to address the issue of skills development with specific focus on technical and vocational skills, which is part of the conversation that is going on at the ILO currently. Technical and vocational skills and apprenticeship as a form of addressing the issue of unemployment globally.
All right, thank you so much. We'll keep tracking progress there. Thank you so much, Mr. Adewale Smart, here the Director General, NECA. And thank you for matching my suit collar. It's kind of similar.
Thank you for having us.
Thank you so much. All right, we'll take a break now. When we come back, we'll take a look at how your money performed on the FX commodities exchange market. That's in a moment. Do stay with us. And for the AFX market update, now the last trading week, there was mixed performances across key indicators. We see turnover fell by 3.79%, closing the week at 2.03 billion naira from 7.2 billion in the previous trading week, while volumes traded witnessed a decline of 4.68%. A number of deals rose by 0.23%, closing at 158 from 156 points in the last trading week. The FX Commodities Index saw an increase of 0.01%, marginal increase, while the FX Export Index maintained at 229.25 points. To the volume of contracts traded, we see there was an increase in volume across cashew nut. Let's get a sense of price action now for export commodities. There was a mixed performance with cashew nut rising by 0.55% and closing at 614 naira 30 kobo. Soybean rose about 20.06%, big jump there, closing at 428 naira. Cocoa also rose about 2%, closing at 2,800 naira, while wheat and sesame maintained at 440 naira and 124 naira 76 kobo, respectively. Sorghum, on the other hand, dropped by 2.80% to close at 353 naira 65 kobo. Alongside paddy rice, dropped by 3.93% and closed at 360 naira 27 kobo. I see ginger dropped by 9.21%, closed at 990 naira. But across the grain commodities now, maize saw a decline of 22.72% and closed at 340 naira 2 kobo per kilogram. All right, let's take the conversation forward. In the dynamic landscape of Nigeria's agricultural sector, the interplay between financing challenges and sustainable growth as critical focal points, and it's essential to understanding the key hurdles facing agricultural financing. Joining us for this conversation now is Bolu Olumide, Analyst, Strategy and Corporate Finance at AFEX. Great to have you on the show. Good morning.
Hi, Ladi. Good morning.
So talk to me about the key challenges right now in agricultural financing in Nigeria, and how do these challenges impact the growth and the sustainability of the sector?
Thank you very much for the question, Ladi. If you take a look at the agricultural sector, first off, you agree with me that the agricultural sector is a very key sector, both to the economy and to any country. Take a look at the trend, especially the share of credit allocation to the industry. What you then figure out is this has increased considerably compared to where it used to be about 8-10 years ago, and then comparing this alongside other industries, especially the oil and gas industry, you see a drop in share of credit allocation, signifying the intensity of the government and the activities of the federal government in diversifying the economy and then agricultural sector. But still a gap that is witnessed within the industry, and the reason are not far-fetched. For example, we know that the banks and other financial institutions are quite reluctant to directly invest in the agricultural sector. This, amongst many reasons, is linked to the presence of the volatility that is inherent within the industry. And then if you then take a step further to the rising cost of inputs, we know inflation has been on the rise, and then with inflation comes hikes in rates, and then youths currently are at their 14.6% on an average, compared to where it used to be a year ago at about 10-11%. So this shows increase in cost of capital, increase in inputs and the cost of inputs, and then difficulty in accessing capital by some of these industry players. And then this has a direct effect on the output of farmers. Say, for example, a farmer who does roughly, a smallholder farmer who does roughly around on an average 10 acres would be expecting a yield of roughly 60 to 70 metric ton, give or take, with adequate financing. But when the access to capital is hampered, what you then see is a considerable drop in this output to their 40-30 metric tons thereabout. And then we've seen over time, if you check the trend, in contribution of agriculture to GDP, there's been really close to no increase at all. It even looks like it's decreasing. So these are the trends we've seen over time.
All right, give us a sense of the main sources of agricultural financing in Nigeria and how accessible they are to small-scale farmers and the agri and other agri-businesses.
Thank you for the question. From our experience, from data, we know and we can tell that certain players within the finance industry have been very key to unlocking capital to the agricultural sector, ranging from banks to microfinance institutions, to development finance institutions, private equity firms, and even government institutions. As much as there's this pool of fund, we must, point to the fact that there still exists the gap, in financing, and the reasons to these are not far-fetched. For example, one of such reasons is the lack of education on the side of farmers, which then makes it quite difficult for them to access complicated financial instruments. A lot is being done across the industry. We at AFEX are very keen on educating farmers, helping them with what is necessary to accessing and unlocking this capital. And to also add, certain features have to be adopted, by industry players to make the journey to accessing capital very easy. One of such will be maintaining a very good credit record. That is very, very key to attracting investors. Secondly, the availability of collateral, providing collaterals, and in line with this, we at AFEX have a few products that enables this particular second point of mine. For example, the e-warehouse receipt, allows farmers to be able to, access capital by providing collateral. And then with the provision of collateral comes, a reduction in cost of input, and it's much easier to access, capital. And then finally, maintaining good books are very, very key and, very, very important to, unlocking and accessing capital. For example, in the crop production line within the agricultural industry, it is seen that EBITDA, margin usually falls, within the range of about 15% compared to the, livestock production line, where EBITDA margin usually falls within 20 to 30% roughly. Because of this sensitivity in this margin for the crop production line, anyone in this line of business knows to pay attention to their operating cost, emphasize frugality, because much more can be done in managing your EBITDA margin than your gross margin, as it were. So presenting good books to proving a sustainable business is very, very key to showing that you are capable of managing funds when they are made allocated to you.
Busy at this time. Talk to us about the role of government policies and initiatives in supporting agricultural financing and development in Nigeria.
Sure, thank you. First of all, I would like to emphasize the fact that there's a need for a collaboration, more collaboration between the federal government and private institutions and other players within the agricultural industry. Over the years, we've seen some of these, we've seen some policies by the federal government rolled out, to stimulate activities in this sector, ranging from, for example, the Anchor Borers program to the National Agricultural, Land Development Authority, and amongst a few others that, have been done in the past. And then, for example, according to the CBN, the Anchor Borers program, as was reported by the CBN to have, created about 15 million more jobs and, cost about $2 billion reduction, in the food import bill. While this is a considerable landmark, and a commendable achievement on the side of the government, we must, state and emphasize how important it is for more of this kind of collaboration to happen. We want to see more of it in the industry and across board in order to further stimulate the industry and ensure food security in Nigeria and the African continent at large.
Right, we're all concerned about food security right now and hoping that we get as much security there. Thank you so much, Bolu Olumide, Analyst, Strategy and Corporate Finance at AFEX. Thank you.
Thank you, Ladi.
All right, that's how your money performed on the AFEX exchange. We'll take a moment now. When we come back, we'll head to other markets. And heading on to other markets now, guess who's back? Will Ebon.
Hi, Larry. Good morning.
Good morning.
You just welcomed me. I needed more grandiose. Something to usher me into the, the stage.
Exactly. Yeah. Will is back.
Okay.
And she meets an incredible market.
Yes, I did. I did.
69,000.
69,000, Larry.
I feel like Will's presence brought 69,000.
It's
almost 70,000.
I always bring the game. I bring on that game. 69,000 heading to 70,000. I'm sure I'm right. Possibly we'll hit it today.
I'm gonna quote you for that.
But that's a good one for the markets. And see that we're gonna be talking to our analyst, and he's gonna be giving us whether we're gonna see that. It's not me, the markets. See how they react to this positive sentiment. So we're seeing this Q3 results trickling in. Some good, some bad.
Right.
But we'll see how that pans out. But you need to talk about the DG NACA saying that the government had the liberty to print currencies, but you said they can't afford that. But
I don't think they have that liberty right now. It's the Ways and Means interest is huge. Already got most of our revenue from oil, so I don't think printing is the right.
It's not the right path, to take right now. But we'll just see how the market, reacts to all of this. If they're even reacting at all. So we see the markets, extending Monday's positive performance, following investors' interest in Airtel Africa. It's up 10% yesterday. We see the all-share index notching a 1.65% gain yesterday to close at 69,236.19 points. Market cap at 38 trillion naira mark. It added about 617 billion naira yesterday. We see total volume advancing yesterday. If you see total volume, let's look at the volume chart to see that advancing about 12.29% yesterday to close at 483.26 million units, valued at 6.04 billion naira. We saw that negative drawback there. Value was not up. Deals up in yesterday's transaction by 4.83%. Now we're going to be talking to Mukhtar Mohammed, he's the CEO of Finance with Mukhtar. He's going to be telling us why the market is going up when we've been seeing that downtrend and we thought the market was going to be, heading there. Mukhtar, good morning. It's good to have you on the program.
Thank you, Will. Welcome back.
Thank you, Mukhtar. So ASI, all-share index has finally hit 69K as yesterday. Tell us, what is that your expectation for the market and how high do you think this is going to go?
Well, Will, the good thing about this is that it's exciting time for the market, especially if you are investors in the financial sector. You've seen those numbers coming in, the earning per shares. I mean, are just something you thought will happen in 2-3 years' time and happening now. You see a stock like UBE having an earning per share of almost 12 naira 38 cover. You see Access Bank growing from 3 naira last quarter to about 8 naira plus. You see GTCO also helping. You see Access Bank also. Those are fantastic numbers, good result. Yeah, like you say, there is a negative when you look at equities like those in the conglomerate sectors, the manufacturing sector like Capri. You've seen Nigerian Breweries. You see Guinness Nigerian PLC. We've seen those negative in those numbers, but one surprising thing that we didn't see negative again was in Dangote Cement. Came out with a good numbers also. So it's exciting time for investors that in the market, and that's why we think with what is happening in the market, the current profit from most of this company is still has they still value some of the stocks to gain more after appreciation. When you look their earning per share by their PE ratio is still low. So definitely for the first time we're seeing fundamentals hitting the same thing as what we're seeing with profit and with results. So good time to be an investor if you're already there, and if you're not there, it's also a good time to begin to think to be an investor.
We talked about these earnings and lots of things to see in terms of earnings per share and the growth for some companies. But some companies struggled in terms of their Q3 results. You see MTN struggling there. But some were very surprisingly came out with very good results. I'm going to name one, Japan Gold. And we did see stock rallying. We did know, some analysts said the FX issue was a temporary thing, and that markets was going to just, the companies are going to glide over it and, bounce back. We're seeing them retracting or retreating, recording losses. Is this going to persist, this FX issue? And do you think the government can actually actualize the 750 naira per dollar ambition that they have for December?
Well, you said it is an ambition, and it's a very big ambition, very huge ambition. Sitting from where I'm sitting, then be able to achieve that is going to be a Herculean task. If you remember yesterday, the INE window, we call it the official exchange window or the foreign exchange market, whatever you call it, hit about 996. So that's almost 1,000. And here we are, government note. If you were ask me what's the true value of the naira, I think they are right to say between 650 to 700. But how are we going to hit that value or make it stable? There means be liquidity is still the issue. And again, government say we're expecting 10 billion according to the Minister of Finance. Then we still have a 3 billion from NMPC that makes it 13 billion. Be able to sort out our forward payment, and then we could see where it goes for them. But I'm not as optimistic as they are to say that will happen by December. But I think by first quarter of next year, we see stability in the exchange rate, and we might just hit that 750, and that could be good news for companies like Japan, for manufacturers of a company like Capri, Nigerian Breweries, Guinness. A stable exchange rate will do a lot to their bottom line. What we are seeing now is the financial sector that are gaining from the fluctuation of the exchange rate. But again, when we begin to have a stable exchange rate, both sectors will gain. But again, the manufacturing sector will be the one that will gain more from it.
A lot to look out for here, Mukhtar, but let's just zoom in on Japan Gold. I know you are a bit skeptical on that stock, but tell me what happened with Japan Gold. Did you see this coming?
You don't see that coming, because when you look, like you said, the FX rate, and you just wonder how they're able to pull all that magic with the FX rate when conglomerates are suffering. So definitely they must be doing something right. But again, let them go a step further. But let's see how they reward their investors by the end of the year. We've seen some of these numbers comes in, and then we see them paying, not even paying anything for investors. Remember, Japan Gold has been on a downward trend. It has moved. I mean, it's one of those stocks that are very, very volatile and are good for for capital appreciation traders like Ladi that looks for capital appreciation, that's a good place to be. And also Will too, if you are looking for capital appreciation, I think you should begin to think of Japan. God, be careful. Let's see what comes out towards the end of the year.
Okay, I think Ladi is going to take on that, bet and, see how he can, grow his capital. Ladi, I'm sure you're listening. Thank you so much, Mukhtar Mohammed, for those insights. CEO Finance with Mukhtar, thanks for sharing your insights on this morning.
Thank you, Will, for having me. Thank you.
Ladi, you've heard it from the horse's mouth. I think you should jump on that bet right now. And see, Japan Gold is probably the place for you to put your money because the minerals, solid, resources is something people are looking into or probably investing in. So I think we should just, investors take position and make the most of it.
Yeah, this is my problem with bull markets. You're always at risk. If you're not in there already, you're at risk of buying the top.
Yes, it's
like
a bull trap all the time.
Exactly, it's not an easy place to be.
Yes.
And you guys did talk about the naira and the ambition of the government, for December. And I believe in the naira.
Okay.
I believe that the naira will gain and will strengthen.
I am with you,
at some point.
I am with you.
I don't know how the government's going to do it, but I believe.
I believe this. So we're looking at the sectors yesterday. It was quite good. We saw banking up, and he did say that the banking sector is benefiting from the gains, the FX issues that we're having right now. Consumer goods quite down. Boa Foods lost in their earnings. I think that really dragged down, maybe the consumer goods yesterday. Industrial goods, we see that up. Cement, I think doing some magic there. Insurance, also up. Oil and gas unchanged. So we're just going to be looking at how the market is going to be closing. I'm going to be talking to an analyst at Intraday and Business Incorporated to see how the market is going to perform. Are we going to hit 70,000 very soon?
I'm going to be looking out for that. If 70 hits, then we'll bring out the champagne and pop it. Thank you so much.
Definitely pop that.
Will, thank you. We'll give all the details there from the equities market and most of the fixed income play. But let's get a check on what's happening in London now. We have Juliana joining us from our London studios. Good morning, Juliana. Great to have you. So we see the AI Summit kicks off today. What are we expecting at this two-day event?
Yeah, good morning, Ladi. I've got to jump into the discussion you were just having with Will, actually. I'm loving the optimism this morning. I believe in the Naira too.
I believe.
You can start a hashtag
on
social media. But
exactly.
Back to a London discussion, well, not really a London discussion, a UK-wide discussion, because the world's first AI Safety Summit has kicked off today in Oxford at Bletchley Park, which is just west of the capital. And it is going to be a big showdown. Last night, there were lots of scenes in Stansted Airport because we did have the arrival of the US Vice President Kamala Harris. She came along with the first gentleman of the United States, and we're expecting more world leaders to come. Not going to see the President of France, Emmanuel Macron, but we are going to see the EU Commission Chief Ursula von der Leyen, as well as representatives from Germany, Italy, Japan, Singapore and China, because it is a huge deal. And I think Rishi Sunak, the Prime Minister, has been very ambitious in trying to pit the United Kingdom as the world leader when it comes to AI regulation. Now, we know artificial intelligence has done absolutely extraordinary things, and at the end of the day it's all about data and algorithm, isn't it? And we know that data is the currency of the world at the moment. So yes, we're all benefiting from it, but whilst we benefit, there are massive fears, not just about possibly the extinction of humanity, if you want to go to that extreme, but then also about what happens to people's jobs and what happens to security, especially when it comes to China. In fact, last week, Rishi Sunak, the Prime Minister, when he was doing his pre-launch of this event, he mentioned China, and he said he knows that some people say they shouldn't have been invited, but certainly considering just how much of a role they play in the evolution of artificial intelligence, they need to be at the table. So that we're going to expect lots of sound bites coming out of Bletchley Park today and tomorrow. I discussed this with you yesterday on Biz Inc. that the biggest part of the show, I think, is going to be the arrival of Elon Musk into the United Kingdom. Now, I'm not sure if he still is the world's wealthiest man, but certainly he's in the top two. Obviously, the controversial owner of X. But what a lot of people won't know or won't realize is that Elon Musk is a major stakeholder in the evolution of artificial intelligence. He is the co-founder of OpenAI, and OpenAI is the parent firm of ChatGPT. And if you're somebody that pushes pencils and works in an office, then of course you understand all about ChatGPT, because I think that's where the first fear of AI's, taking out jobs and admin roles has come from. So yeah, lots happening in London, in England today. So expect lots of sound bites out of the British capital as we go into the world's first AI safety summit.
Right, and Juliana, I'm also wondering, is AI going to take our job, sometime? I don't know. Maybe, who knows? As long as you don't upload yourself, I guess. All right, let's look at some...
No comment.
No comment, right, no comment. Let's look at some earnings now. See, WeWork shares, that plunged on a report of looming bankruptcy filing. Tell us more about this.
Goodness me, what a huge fall from grace for WeWork, which when it first started out, so basically WeWork is a flexible workspace provider. So if you're somebody with a small business or you're a freelancer, you may want to have a very nice office, whether it's Park Avenue or somewhere in Mayfair in London, but you can't afford it. You rent out these temporary office spaces. That's what WeWork is known for. They've been going for about 14 years, started off in New York. At the height of their success, they were worth about $50 billion US. That was their market capitalization. Unfortunately for them, it all went wrong when they decided to go public, and it went wrong because of the timing. They decided to go public in 2019, and of course, we cast our minds back there. There was a small virus going around called COVID-19. It ended up with the world closing down. Obviously, millions of people were working from home, so their business model completely sank. Now they've tried to regain since that time, but it's very difficult for them. And I think a lot of investors were like, your WeWork are renting out these spaces for 10, 20 years, but your business is only guaranteeing income for 6 months or 1 year, because of course that was the model, temporary spaces. So they're in trouble. As you said, their shares dropped dramatically last night on Wall Street. Late night trading dropped by 40%, and now there are suggestions that the firm is going to file a Chapter 11 petition in New Jersey. So really disappointing, especially because it was a kind of millennial, really fresh, modern type of business model, but COVID-19 scuppered all of their visions.
Right. Well, I guess it's still earnings season, and we'll be expecting more earnings to flow in. Thank you so much, Juliana, for the update. Thank you. All right, let's get a check on the crypto market now. See, Bitcoin attempted another increase above the $34,750 resistance zone, spiked above that to $34,950. And we see the color on the screen there. It's pockets of green and pockets of little pockets of red right there. 34,412. That's the price between for Bitcoin there. It's in the green. Unlike yesterday morning, same time, we saw Bitcoin was in red, marginally down, but most of the markets were in the green. But now it's a different color we have this morning. Ethereum marginally down there. So that's the color right there. It's looking quite in between right now for most of the cryptocurrencies we track. Let's look at the sentiment in the market now. We see it's 66 points over 100, still on that greed point. And if you're one to trade with the fear greed index, obviously following Warren Buffett's style of trading is you buy when the market is fearful and sell when the market is greedy. So you might want to use that, but that's greed there, not financial advice at all. Let's look at the top cryptocurrency track now. Bitcoin, $34,412, 0.18% margin up this morning at 8 a.m. And we see Ethereum marginally down there, 0.09%. BNB holding on that above the $200 level. There's a native coin for the Binance Exchange, 1.33% down. Cardano trying to get back above that 30 cents level there, but we're seeing a big drop there. Sell pressure, 5.21% for Cardano. And we see XRP not able to get to that 60 cent level, but it's reaching for that point now, 58 cents, 2.16% drop. So the first trading day in November, definitely be looking out for what happens in the whole of November. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide. Good morning.
Hello, Daddy. Good morning. Happy November.
Happy November. Happy new month, Olumide. What are we expecting for price action this month? And, you know, looking historically, is November ever a good month for the crypto market?
Very tricky, but it looks like the bulls are riding on what happened in October. You know, fully well, that Bitcoin appreciated by 27% month by month. That was the highest level we saw Bitcoin trading since May 2022. And right now, market tacticians are looking at the next price level, and that is the $40,000 mark. And pretty much, you know, all has been oscillating around the anticipated Bitcoin spot ETF that will bring in between $50 to $155 billion into the suppressed crypto market. So yeah, things have been moving, oscillating faster than a lot of market as anticipated. You know, Bitcoin has doubled in price this year, and the way it's rallying, it looks like it's not a wise deal betting against the asset. But you know, today as we speak, the U.S. Fed will be concluding their the FOMC meeting, where they will speak about the interest rate decision. That will be a very key metric to look at, because it doesn't look like we're going to see a spot Bitcoin ETF in this quarter, despite a lot of optimism. And that's because the US SEC had highlighted that they have between 8 to 10 applications, and regulators really have to consider a lot of metrics before any approval is set. So I think it's much more on the US but now the bulls are really having a fun time.
All right, Olumide, still talking about this Bitcoin spot ETF. Will it really be wrong if you know, they don't get this spot ETF approval? Because we've seen bull markets, you know, in the past in the crypto market. There was no spot Bitcoin ETF, but the market still rallied. Is it really that necessary to have a Bitcoin spot ETF?
It's really very necessary, because if you look at the market liquidity in the space, you see that it's partly because of Bitcoin. And that will really give conservative and traditional investors some high in the market. You know, we have a lot of powerful investors that won't touch these assets if they don't have some SEC sort of authorization around that. And you know, one of the things BlackRock really highlighted was the fact that that would give them exposure. The traditional investors will also have exposure in their fund to price on Bitcoin. So it's a much needed. If we don't get an approval, or we get it in a Bitcoin definitely for close to the 25,000 in the short term, and in long term might start oscillating between the 15,000 to 20,000. But you know, the way things are going, the odds are that we might see a Bitcoin spot ETF with the kind of powerful players trying to get their ETF funds approved. But we don't want a negative response.
All right, Olumide, maybe you can bring out your crystal ball now. What new high are you seeing for Bitcoin in November?
Well, positive news around the spot ETF definitely will make $40,000 mark a reality. The US Fed, hawkish US Fed narrative, risky contagion, geopolitical uncertainty amplified, the war between Israel and Hamas going up might definitely weigh down on Bitcoin. So it's a war of both sides. But I think it's very cautious to be fair that we might not see the way Bitcoin rallied in the month of October rallying this month. It looks highly unlikely, because the US Fed is still having that hawkish undertone, and geopolitical concerns around the economy is not making things happen. And back home, Nigeria, the federal government is trying as much as possible to reduce speculative tendency in the market. So that would definitely reduce USD positioning among the biggest African crypto market at some point. So that liquidity we are seeing might at some point be moderated.
Yeah, and it's quite interesting the different tags we have for sentiment with the Fed there. We've talked about hawkish hold, dovish rate increase. I'm sure we might have a hawkish cut at some point for rate. Who knows? Thank you so much, Olumide Adesina, financial market analyst. Thank you.
Thank you for having me.
All right, so that's the show today. Thank you so much for watching. Don't forget you can get more updates on www.channelcv.com. Also join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you again for watching. I'm Ladi Williams, and have a profitable November.